Thanks for tuning in. I see you're passionate about your future, so we're going to dive right into it. So what I will be covering in this video is market structure. So we know key areas are important, knowing where price is coming back to and then knowing where it's going. But if you add knowing market structure with knowing the key areas, you'll see your trading definitely go to the next level. I mean, for sure. Knowing market structure would give you the ability to spot the best setups, right? It's going to give you the highest RR. It's going to give you the chance to leave hella runners and also save you from making some stupid losses and getting into some stupid setups that's going counter trend or against the grain just because you don't know where you are in the market. So knowing market structure will definitely give you a huge edge for sure. So this market structure video is going to be a 2-part series. I try recording everything in one video. It's like 45 minutes long, so I wasn't going to do that to you guys. So I'm gonna split them up. I'm trying to be as detailed as possible to make sure we get to understand this to the best of our ability, because I know there will be questions, so it is what it is. I just got to split them up. In this video, we will be going over the 2 most famous market structures that's mostly talked about. In the second video, I'm going to go over the 2 market structures that I believe are underrated and they go overlooked, and it's definitely something that I feel we need to speak about. So both of these videos will be key. So the first thing we need to know about market structure is that it will not always be perfect, and that is because the market isn't perfect. So the market structure is not always going to be clear as day, and then you're going to be able to see it, right? Sometimes it's going to be a little messy, and we'll have to know what we're looking at and know what's happening and be able to pick out that market structure, but still not force something that's not there, right? In some cases, it might not be no structure. It's like that sometimes. So we have to be able to differentiate what is structure and what's not, so we're not making silly mistakes and crazy setups, right? So we're going to draw them out here and we're going to take it a step at a time and break it down. So let's draw out our first market structure, which I believe is the most famous one, and that is the uptrend. So you come to your session, right? And this orange line will be price. You come to your session and we see price heading up, right? Nothing abnormal. It's heading up. And then it pulls back, because we know that's what price does. We know the market has to correct itself, so it pulls back, right? So let's pause right here. At this point, price was coming up and pulled back, but it didn't break below where price started, right? So we're already watching price closer at this point, because if price comes up and breaks this high, then we already know that we're on an uptrend, right? So a key right here is you want to focus on the pullbacks. The pullbacks are important. The pullbacks, right? Pullbacks right here. This is a pullback. Price was coming up and then it pulled back, right? So we're expecting it to take off again. So the pullbacks are important on an uptrend. And also on an uptrend, we're focusing on our highs. And you will see why in just a second, because this structure is just starting off. So we're focusing on our highs on an uptrend because the price is going up. It's going to the upside. It's going high. So we're focused on our highs and we're focused on the pullbacks. The reason why we're focused on the pullbacks is because, and again, I don't mark up my support and resistance this way, but I do understand that most traders do. So if I see this structure happening and this setup happening, I'm not lost. I know what's going on, but I'm not going to get in. I'm not going to trade it, but I do understand that some people is getting in at this point. So what most traders will do is they'll put this line right on the pullback. As soon as price pulls back, they'll put a line right here. And the reason why they'll put a line right here is because that pullback has created a swing high, it has created a swing high, right? So this pullback right here is a high. So let's just put an H. So that pullback right here, this pullback created a swing high. This high wasn't going to be able to be made until a pullback happened. A pullback could have happened way up here, and then a high, the first high would have been up here. So pullbacks are important. That's what we focus on. And the reason why most traders would have came and put that line right here, right? They would have put a line right here to use as kind of like a key area because of that pullback is so important. What they're hoping is price comes up, right? Breaks the previous high. And we're going to pause right here. We're going to pause right here because there's a couple important points right here. So remember I said on an uptrend, we're focused on the highs, right? So we came into the market, price was headed up. We saw it pull back like the market does. And then it blasts off and breaks and goes higher than its previous high, right? So this pullback is so important because it creates your highs and your lows. And your highs and your lows actually create your market structure. You're going to see. We're going to go over this. So this first point down here is a low. So we're going to put an L right here. This first point where price pulled back and then it goes and breaks its high. This is a low, obviously, right? It was going high, pulled back, and there's no other price lower than this price. So that's a low. That's our low, right? Now, what we see is price coming up and going higher than its previous high, as it should, because we're on an uptrend. So we should be breaking our highs, right? We should be having higher highs. So what do we have right here at the top? Well, we just hinted towards it. We have a higher high. So we're going to do double H for higher high. So this is why we focus on our highs on an uptrend, because if price is headed up, if price is going to the upside, then it should be breaking its previous high. Just really picture this in your mind. If price is going to the upside, if this is an uptrend, then price should be breaking its previous highs. This isn't some type of curing cancer or right trying to be the first Elon Musk or something like that. This isn't rocket science. We're not trying to get to Mars. It's simple. Then this high, the one right here, broke its previous high, which makes sense because we're on an uptrend. So the high should be being broke. So also going back to this line right here where most traders would have put their line because of this pullback. So pullbacks are really important. Pullbacks create your highs and your lows, which in turns create your market structure. So this first pullback, a trader would have that sets it up like this would have put a line right here to use as support for when price blasts above and creates a higher high. What they're hoping for is for price to come back down as an uptrend does, and the market corrects itself, hits off this line, and what they're hoping for is to find some type of entry, break of candle, maybe a pattern, engulfing, something right here to get in to go to the upside. So what we have to realize is because pullbacks are important, right? So as soon as price pull back, what are we doing? Well, we have a higher high that we can mark up. And since it's just pulled back, now what is this point? This point is a higher low. I really hope that makes sense. This is a higher low. Why is it a higher low? Because this low is higher than its previous low. It's not a lower low. A lower low will mean it's lower than its previous low. So price will have to come all the way down here for it to be a lower low, because this low right here is already established. So if price pulls back right here, this is a higher low. So really picture what price should be doing if we're on an uptrend. If price is going to the upside, the highs should be being broken and the lows should not be. The lows should be creating higher lows, pushing the bottom of price up. You see what I'm saying? You got to picture this. We got to get creative. The lows should be higher every time, pushing price up. And if the lows is pushing price up, the highs should be being broken. So if we know that, then what a trader would do is get in right at this point and take it to the upside, because they know that price should come and break its previous high because we're on an uptrend. So this is market structure. This is market structure. This is how price moves. We have to realize that this is an uptrend. It's not going to always be perfect or clear, like I said. So we have to be able to spot this. But it can be as simple as plotting your highs, your higher highs, and then plot your lows and your higher lows. If the lows is pushing up and the highs are being broken, we have some pullbacks because you just plotted these points, then obviously we're on an uptrend, right? So what is this point right here? Well, if it broke its previous high, then that means this is a higher high. Just that simple. Just that simple. And now what would a trader do that trades their support and resistance like this? Well, excuse me, that's the wrong line. Well, they will go and add a line right here. And what are they hoping for? What are they waiting for? They're waiting on price to pull back. They're waiting on price to pull back, to correct itself, and then hit off of this support, right? Think of support like the floor. It's going to hit this support and then go and break its previous high, because that's what it should do. So just to take it a little further, like I said, I want to be as detailed as possible. If price comes back down, right? And again, some traders are hoping to get in right here because they know we're on an uptrend, because we have higher highs being broke and we have higher lows supporting the uptrend, pushing price up. So they're hoping and knowing that price should break its previous high. So they're trying to get in right here. Stop loss is somewhere down here, and they're taking that support setup. But what I want to focus on is the pullbacks, right? The pullbacks are very important. So we just created a higher high and price comes down to this line, and assuming it's going to jump up, then we have a higher low. Why? Because this low is higher than its previous low. So now this is a higher low, which makes sense because the low shouldn't be broke if we're going to the upside. So this is market structure, right? You got to know it. You got to know it. This is an uptrend. Like I said, some traders are putting their support and resistance off of the pullbacks, and these pullbacks are called your swing highs. And it's a new one every time there's a new or a higher high. So now this is your swing high, right? Now this is your swing high because there's no other price above it. So this is your swing high because this price just pulled back. Simply just pulled back. So this is an uptrend. So I really hope we understand that. Really hope you understand that. So we're just going to go over the second most famous structure that I believe is out there. And if you haven't guessed it, it is a downtrend. So we come to our session and we see price heading down. We see price heading down. Now it's going to be kind of the same as an uptrend, but the language is a lot different. The language is a lot different. So price is heading down, right? And then we see price pull back like it should, pull back, kind of correct itself, right? Again, at this point, we're paying closer attention to price because we see that it was heading down and it pulled back. Again, pullbacks are important. So as soon as price pulls back like this, I promise you, majority of traders is putting a line right here, right? And then we can go ahead and mark up our first low. Our first low. If price is going down, then we're focused on the lows. You see what I'm saying? On an uptrend, we're focused on the highs being broke, right? On a downtrend, we're focused on the lows being broke. In both scenarios, the pullbacks are very important because it creates your highs and your lows, right? Which in turn creates your structure. But you got to realize the language and what we're focusing on is different in these two scenarios. Again, uptrend, we're focused on the higher highs, the highs being broke, and the lows holding and pushing price up. So it's going to be inverse on the downtrend. We're focused on the lows being broke, and the highs should be holding price to the downside, right? So we have our low right here. And again, what traders are hoping for is for price to come down and break its previous low. And as soon as price comes down and breaks its previous low, at that point, we know we are in a downtrend. You have to catch this early. We don't want to be in this area just now trying to get in for a buy and taking it up. I'm telling you that right now. It's going to be exhausted. Look how much market structure this is. You don't think it's going to reverse or it's ready to drop, or you don't want to be buying high, right? We're trying to buy low. We're trying to buy low and get all this profit, not buy up here and hope it don't get exhausted or something like that. So we have to catch these structures early. So as soon as price pulls back, we have our first high. We have our first high. Right here, we have our first high. But price came and broke its previous low. So now what is this point? Well, if it broke its previous low, then that will make this 2 L's, lower low. Why? Because this low is lower than its previous low. Look at this. Price came down and broke it. It went below the first pullback, below the first low. And these lows, these pullbacks, when these pullbacks happen, these lows are called your swing low. Your swing low. So prices came down and created another low. So if it pulls back, we will have a new swing low right here. And back on that tip, you know traders are waiting for price to pull back, as it should, to correct itself. Again, they're looking for some setup right here, and they're using this line as resistance. Now I think it's resistance as the ceiling. So they're using this line as resistance, hoping to get a engulf in, some type of supply, some type of, I don't know, something right here. Some confluence that they need to get into the trade to take it to the downside, right? But again, pullbacks are important. So as soon as it pulls back, we just created a lower low. So what would this top one be? A lower high. Why? Because this high right here is lower than this one. This high is way up here. Is price coming up here and breaking this high? No. So it's lower than it. It could have came right here or close to it. As long as it's lower than it, it's a lower high. Simple. Price will not always be perfect. So we just have to work with what it's giving us. This is a lower high. Lower high. As it should be, because the high should be pushing price down, right? So the low should be being broken, not the highs, if we're going to the downside. So now some traders are in on this resistance play to the downside, right? And again, pullbacks are important. So when price pull back right here, what are a lot of traders doing? Well, they're putting a line right here. The ones that's just now recognizing we're in a downtrend, they putting a line right there in hopes that price comes back up and they can get in right here for a resistance play, some type of sell move to the downside, right? So if price pulls down right here, what do we have right here? A lower low. So that is now our new swing low. Price comes up, right? Pulls back. So that pullback is going to create your next lower high, because this high is lower than its previous high, right? Really hope you're getting this. This high is lower than its previous high. So these highs are holding price down to the downside. It's pushing price down and the lows are being broken. Look at this low now. This is a lower low. This is a lower low. Why? Because this low is lower than its previous low. So these lows are being broken, as it should if we're heading to the downside. So really know the difference between these two market structures. They're definitely important. You can definitely trade them. It's a lot of ways you can trade them. Like I said, majority of traders mark up their support and resistance off the the uptrend and downtrend, as I showed you, right, with these gold lines right here, and they're waiting on price to pull back. But what you have to understand is these pullbacks are really important. These pullbacks create your highs and your lows, which in turn creates your market structure. So you have to know when a high or higher high or higher low or lower low or lower high is being created in order to even map out your market structure, right? You just can't come and draw a line and just be like, okay, this looks like an uptrend. No, for it to be an uptrend, the highs must be being broken and the lows must be pushing price to the upside. The lows cannot be being broke. On the downtrend, for it to be a downtrend, the lows must be being broke and the highs must be pushing price to the downside. That's it. That's all. That's it. So just get used to plotting out your points, right? Your highs and your lows. And depending on what language you're using and what you're seeing, you will be able to tell what market structure you're in. You will be able to tell what market structure you're in. So just real quick, I want to talk about break of structure, because you won't understand the break of structure unless you first understand market structure. Because if we're looking at the break of structure, you have to know if there's structure to even begin with for you to say it's being broke. So if this is the structure we have, is an uptrend, right? And we know this last point should bounce off this line and break its higher high. If it does something like this, right? If price comes down and doesn't give them an entry right here, breaks down, and look, it came lower than its previous low. We know if we're on an uptrend that these lows should be pushing price up, should be holding price up. So the fact that it came and broke structure, why did it break structure? Because the lows aren't supposed to be being broke on an uptrend. The highs are. So that's how it broke structure. See how that makes sense? So it broke structure to what? The downside. If it's breaking the lows, then price is telling us it wants to go to the downside. And I'm telling you this right now. This is exactly how it's going to look. Not as pretty, but when price gets exhausted from an uptrend or downtrend, you're going to get a break of structure, letting you know that price wants to reverse. So this is what a break of structure look like. So at this point, we're waiting on maybe a supply we see up here, or we're waiting on price to pull back to get in for the downside, but we know price wants to reverse. So that's what we're knowing now because of the break of structure. So that's what a break of structure will look like on a uptrend, right? It's just not respecting the trend. If we know it's supposed to come up here, let me draw this out so you can really see this. Price was supposed to do this, right? Price was supposed to do this and break its previous high to the upside, but instead it fell and even broke structure, because this is structure. This point, I told you, your pullbacks create your points, which in turn creates your market structure. So if that's the case and we're on the uptrend, we knowing that these lows are supposed to be pushing price up. They're not supposed to be being broke. For it to break this low right here is very alarming, and that is a break of structure. And the same thing for a downtrend, right? Same thing for a downtrend. We know price is supposed to come up here, right? Or something like that. But if it comes up here, if price does something like this, that is a problem. That is definitely a problem, because the lows are supposed to be being broke on a downtrend, not the highs. The highs are supposed to get lower and lower, pushing price down. You're supposed to have lower highs. So the fact that we have a higher high now, because that's what this would be, this point right here, just real quick, y'all got to see this, and we'll touch on break of structure more, of course, but it starts with this. So don't get confused. This one right here is now a higher high because it broke this high. We shouldn't have higher highs on a downtrend. So that's very alarming that price just broke structure to what? The upside. We have a higher high. Higher high sounds like what? An uptrend. You see what I'm saying? So it all loops around. It's all connected. Your market structure will create your key areas, and your pullbacks create your points, which in turns create your market structure. So knowing market structure and the key areas, and then adding our strategy in there, high probability supply and demand setups on the 15-minute, and then zooming into the 5-minute to get a sniper entry. Man, this stuff is powerful. This stuff is powerful. And you know I love setups that break structure. So if this setup right here, if I was in a market and I saw this setup happen, I will be hoping that there was a demand, a 15-minute demand down here. And what I would want price to do is come down and let all the other investors in. And then, of course, we'll be taking that demand up. And that's what a reversal will look like. That's what a reversal will look like. That's what it would look like. Or you can even have a demand up in this area or something like that. You know what I mean? You never really know, but I love the demand being at the very bottom, especially for a reversal. Get a lot of pips, big moves like that. So I really hope you got something from this. Like I said, I tried to be as detailed as possible. I know there's going to be questions, so hit the comments. I'm gonna go over each question and explain it more. If we need more videos than just 2, of course I'm going to give you guys that, because I need you to understand this to the best of your ability. I promise you this will take your trading to the next level. Again, this is just the first 2 most famous structures, market structures, uptrend and a downtrend. We'll go over 2 low-key ones that's kind of overlooked and I spoke about in the next video, and hit on breakup structure in those structures as well, so you can see how a breakup structure will look and how we would take it. But this right here is key. This is key. It's not a lot of people breaking down market structure like this, so I really hope you got something from it. If you like what we went over, please like, comment, subscribe, share the channel, hit that notification bell. Definitely want to know when I post the next market structure vid, so it can all make sense to you. I appreciate all the love. You guys has really been tapping in, so I appreciate the support of my channel. It's going to be more content like this coming, of course, so stay tapped in. I'm Mr. Unorthodox. Keep thinking outside the box. Peace out.